Okay, welcome to the deep dive. Today, we're strapping in and going straight to the source for a close look at one of the biggest names in the sky, United Airlines.
Yeah, not just news reports this time.
Exactly. We're not relying on analyst summaries or anything like that. We're actually cracking open their words, specifically their recent Form 10-K filing.
The big one.
The super detailed report they hand over to the SEC covering their fiscal year that wrapped up on December 31st, 2024.
And this is essentially the company, pulling back the curtain themselves, giving a really comprehensive look at their business, their financials, and importantly, their strategy and, well, the challenges they're facing.
Right. Our mission here is to sort of cut through the corporate jargon, pull out the real nuggets of insight. What does this massive document tell us about how United is actually doing? Where are they putting their money?
And what are the big headwinds they're flying into?
Yeah. All designed to help you, our listener, get a properly informed picture without needing to, sift through hundreds of pages yourself.
Think of it as getting the insider's view, sort of, on how they're navigating the incredibly complex and competitive world of air travel right now.
So let's unpack this filing and see what story it tells us about United's flight path for the future.
Sounds good. Where do we start?
Let's start with the foundation, the structure. The filing confirms we're looking at United Airlines Holdings, Inc. That's the parent company.
Right, the holding company.
And its main engine, the airline itself, is United Airlines, Inc. And they lay out their shared purpose right up front, connecting people, uniting the world.
That's a big statement.
It is. And that big picture statement really frames their operational scale, which is just vast.
Absolutely vast. They're moving people and cargo, not just across North America, but reaching out globally, Asia, Europe, Africa, the Pacific, Middle East, Latin America. We're talking operations touching 6 continents.
And all flowing through this crucial network of hubs.
Which are absolutely central to everything they do.
Yeah, the filing lists their major ones. Chicago O'Hare, Denver, Houston Intercontinental, LAX, Newark, San Francisco, Washington Dulles.
And even Guam, right.
Yes.
E1 PAD International.
Exactly. These aren't just dots on a map. They're the strategic centers.
And what's really interesting is how those hubs are like the literal foundation for their core strategy, the one they call the United Next plan.
Ah, yes. United Next. We hear that a lot.
We do. And it's not just, incremental tinkering. It's presented as this ambitious multi-year effort to significantly transform the airline.
How so?
By really aligning their network and their product offerings with the full potential of those hub locations. And a huge part of this plan, which they emphasize right at the start, is safety.
Safety first, always in airlines.
They list it as their first service standard, no small roles in safety, and they talk about continuously evolving their safety management system as they grow, which is, well, critical.
Okay, so United Next is about leveraging the hubs, focusing on safety, and I guess building loyalty, right? Creating different ways to bring in revenue.
Exactly, from basic economy right up to their premium cabins like Polaris. But the filing, it details some really tangible pieces of this plan, and the most eye-popping has to be the aircraft orders.
Oh, yeah, I saw that number. It's huge.
It truly is massive. They expect to take delivery of over 660 new narrow and wide-body aircraft by the end of 2033.
Over 660 new planes. That's a colossal investment.
Colossal. And the filing says these new jets are intended to increase gauge.
Which means basically putting bigger planes on key routes.
Right. Bigger planes boost overall scale and connectivity within their network and, crucially, improve fuel efficiency, which is, increasingly vital.
You can't fly all those new planes without people.
The filing notes they've significantly grown their workforce, added more than 30,000 employees since 2020 just to support this increased activity.
Wow. And for passengers like us, how does United Next show up?
Well, in customer experience upgrades, they mentioned they've already passed 300 aircraft featuring their signature interior.
Okay, what does that mean?
Think larger overhead bins, the ones that might actually fit your carry-on.
Finally.
Seatback screens at every seat for entertainment and Bluetooth connectivity. These are the kinds of, tangible details that really impact the travel experience.
That does sound better. And what about the network itself?
Network expansion is another key component detailed right there in the filing. They're not just adding frequencies, they're adding destinations that really highlight their global ambition.
Like where?
Places like Ulaanbaatar in Mongolia, Nuuk in Greenland, Kaohsiung in Taiwan, numerous new spots in Europe like Palermo, Bilbao, Faro, Madeira, And down in Latin America, like Puerto Escondido, even Dakar in Senegal.
Wow, those are some interesting routes. Really building out the global map.
Exactly. Builds out their network and reinforces that hub connectivity.
And they're looking beyond just flying, too, aren't they? I saw something about media and Wi-Fi.
Yeah. Innovating beyond just the core airline service, the filing mentions launching Connective Media ISM, basically a media network using their travel insights for targeted advertising. And they announced an agreement with SpaceX for Starlink's Wi-Fi.
Starlink. So aiming for really fast, reliable connectivity in the sky.
That seems to be the goal. It shows they're looking for new revenue streams, sure, but also enhancing that passenger experience.
Okay. So passenger flights are the main thing, but what else brings in money?
Well, beyond the core passenger service, the filing also covers other areas. Air cargo is significant.
Right. Freight and mail.
Yeah, using capacity on passenger flights, but also interline agreements, charter flights, even ground trucking.
And how they sell tickets seems strategic, too.
Very. They push their direct channels, United.com, the mobile apps, and they explicitly state this helps them decommoditize their offerings, basically make it less about just price.
And lowers distribution costs, builds loyalty.
That's the idea. Though they still work with traditional and online travel agencies via the global distribution systems, the GDS.
Okay. Anything else on revenue streams?
Yeah. Finally, they detail revenue from what they call third-party business.
Which includes?
Things like aircraft maintenance services for other airlines, non-travel redemptions from their frequent flyer program, using miles for things other than flights, plus revenue from their flight academy, and ground handling services for others.
So it's a real mix of revenue sources beyond just selling that seat on the plane.
Definitely, a diverse portfolio.
Okay, so that's the ambitious growth strategy. United next. But the filing doesn't exactly paint a picture of clear skies ahead, does it? It talks a lot about hurdles.
Not at all. It's very clear-eyed about the risks. One of the biggest they call out is simply the uncertainty baked into their own assumptions for the plan.
Assumptions about what?
Everything, really. Demand levels, fuel prices, crucially, those aircraft deliveries actually showing up on time, labor availability, supply chain stability, inflation, what competitors do, geopolitical events, you name it.
So if reality turns out different.
Right. If reality deviates significantly from these assumptions, the plan's success, and therefore the whole business, could be adversely impacted. It's a big caveat.
And competition. Always fierce in the airline world.
Relentless. They're fighting for customers on every single route, based on fares, schedules, the service quality, the product itself, loyalty programs. The filing notes how consolidation and those well-funded international carriers constantly shift the competitive landscape.
Plus the whole industry is tied to the economy, isn't it?
Hugely sensitive. The filing stresses it's highly cyclical, correlates directly to economic strength. Things like unemployment rates, consumer confidence, inflation, these can all hit demand for both leisure and business travel.
And global stuff too, trade relations.
Yeah, deteriorating international trade relations could specifically harm international travel demand, which is a big part of their network.
Then there are the operational nightmares.
Delays, weather. Operational disruptions are a constant headache, especially for a hub-and-spoke airline like United. Think air traffic control delays, bad weather, natural disasters, problems with third-party providers like ground handlers.
Cybersecurity threats too, I imagine.
Definitely. Cybersecurity, even government shutdowns impacting agencies like the FAA or TSA. The filing actually points to specific recent examples to drive this home.
Like what?
Like the capacity restrictions they faced at London Heathrow back in 2022 and significant disruptions at their Newark hub just in 2023. It highlights how real these risks are, how they can bite.
And relying on just a few plane makers, that seems risky.
It is. Dependence on a limited number of suppliers, primarily Boeing in their case, is called out as a significant risk.
Especially with recent issues.
Exactly. The filing cites things like the temporary 737 MAX 9 grounding in 2024 and ongoing delays in the MAX 10 certification process. These show how supplier problems can directly mess up their fleet plans and operations.
And we still hear about labor issues and supply chain problems everywhere.
Yep. Those constraints and rising costs continue to be headwinds, affecting both United directly and their operational partners, caterers, maintenance providers, you name it.
Plus just layers and layers of rules and regulations.
Oh, the regulatory environment is incredibly complex. Domestically with the DOT and FAA, internationally with foreign governments, compliance adds costs, and actions by regulators can directly impact operations and expenses.
Like FAA groundings you mentioned, or...
Or foreign mandates pushing for things like sustainable aviation fuel, SF, which can increase fuel costs significantly if not managed carefully.
Okay, you mentioned SAF, sustainable aviation fuel. That whole environmental sustainability piece sounds like a unique challenge.
It really is. I mean, they're investing in SAF, which is basically jet fuel made from renewable sources, and they state these ambitious climate goals, aiming to achieve them without relying on traditional carbon offsets.
That sounds good, but...
But the filing is very frank. It acknowledges that current SAF supply is very constrained. It was less than 0.3% of their total fuel use in 2024.
Less than 0.5%.
Yeah. And it costs more than conventional jet fuel. So achieving those climate goals relies heavily on a SAF market that's, well, still developing. That adds a lot of uncertainty.
So even as they grow, emissions might go up initially?
The filing actually notes that absolute greenhouse gas emissions are expected to increase in the near future because of their planned growth, even as they work hard to improve the intensity of the emissions per passenger mile.
Okay, that's a really comprehensive look at the strategy, the operations, the risks. Let's turn to the numbers now. How did all this actually play out financially in 2024? What does the report say?
Right, let's look at the income statement highlights. Overall revenue performance, looking at total operating revenue, it was up significantly year over year.
How much?
It increased by $3.346 billion. That's a solid 6.2% jump, reaching $57.063 billion in 2024.
Okay, $57 billion. And breaking that down, passenger revenue must be the bulk of it.
Absolutely. Passenger revenue, their bread and butter, increased by $2.783 billion, or 5.7%, landing at $51.829 billion.
Nearly $52 billion just from passengers.
Yep. But what's interesting is that cargo revenue also saw a pretty healthy jump. It was up $248 million, which is actually a 16.6% increase, heading $1.743 billion. 16%.
That's quite a boost for cargo.
It is. And their other operating revenue, that third-party stuff we talked about, was up too. $315 million, a 9.9% increase, bringing it to $3.491 billion. So, yeah, growth pretty much across the board on the revenue side.
Okay, but revenue is only half the story. What about the expense side? Costs must have gone up, too, with all that activity.
They did. Total operating expenses increased by $2.461 billion, or 5.0%, getting up to $51.967 billion in 2024.
So costs went up, but slightly less percentage-wise than revenue. Let's look at the big movers on the cost side. What drove that increase?
Well, the single largest driver by far was salaries and related costs. That line item was up a whopping $1.9 billion.
Wow, nearly $2 billion more just on people.
Yeah, a 12.8% increase. The filing links this primarily to annual wage rate increases across their employee groups, plus that nearly 4% increase in headcount we mentioned earlier, tied directly to flying more.
Okay, that makes sense. What about fuel? That's always huge for airlines.
Interestingly, aircraft fuel expense actually went down substantially.
Down? With more flying?
Yeah, it decreased by $895 million, or 7.1%.
How?
Primarily due to a lower average price per gallon of fuel in 2024 compared to 2023. That helped a lot. Though, as you said, they did burn more total fuel because they flew more flights, which partially offset that price benefit. But the lower price won out overall.
Got it. What else jumped out on expenses?
Aircraft maintenance costs. They increased by $327 million, or 12.0%.
That makes sense, right? With the United Next plan bringing in new aircraft and doing all those interior upgrades we talked about.
Exactly. Induction costs for new planes, more maintenance events, then there's distribution expenses.
For selling tickets.
Right. Up $254 million, or 12.8%. This is directly related to that increase in passenger revenue. More sales mean higher costs for things like credit card processing fees, travel agency commissions, GDS fees.
Okay, logical. Any other big ones?
And then there's that large other operating expenses category. It jumped by a full $1 billion, or 12.3%.
$1 billion? What's in there?
It's kind of the catch-all for costs tied to just doing more flying and carrying more passengers. Think IT support for new systems, the food and beverages you get on board, the ground staff handling baggage at more airports, plus the impact of general inflation on lots of smaller items.
Okay. Now, you mentioned something earlier that sounds important for understanding the bottom line. Special charges.
Yes, absolutely crucial. Here's a key point from the income statement. Special charges. These decreased dramatically. They were $949 million in 2023, but only $112 million in 2024.
That's a massive difference, nearly $850 million less. What was driving that huge number in 2023?
The filing explains it clearly. That massive 2023 figure included $814 million specifically related to labor contract ratification bonuses.
Ah, one-time payments for the new union deals.
Exactly. Those big bonuses hit the books in 2023. The 2024 figure for special charges was much smaller, primarily $128 million related to costs from prepaying some debt and refinancing other debt.
So what does that mean for comparing the profit year over year?
It means the 2024 net income figure is much cleaner, you could say. It reflects more of the underlying operational performance compared to 2023, which was really dragged down by those huge one-off bonus payments.
Okay. And speaking of net income, the bottom line, what was the trend?
The trend has definitely been positive. Net income increased from $739 million back in 2022, jumped to $2.620 billion in 2023, even with those special charges, and then climbed again to $3.151 billion in 2024.
So profitability moving in the right direction. Good to see.
Definitely. Now, if we glance briefly at the balance sheet as of the end of 2024, a couple of key things pop out.
Like what?
Cash and cash equivalents were up significantly. They ended 2024 with $8.769 billion compared to $6.058 billion at the end of 2023.
More cash on hand.
Yeah, though their short-term investments actually decreased. So maybe just a shift in how they were holding their liquid assets. More cash, less short-term payday.
On total assets. Must be growing with all the expansion.
Yep. Total assets grew to $74.083 billion, reflects the business expansion. And a big chunk of that increase is in operating property and equipment, net. That line item increased to $42.908 billion.
$43 billion. That's where you really see the direct investment in new planes, right? Under United Next.
Exactly. That's the fleet investment showing up right there on the balance sheet.
Okay, what about the other side? Liabilities and debt.
On the liability side, their total debt, finance leases, operating leases, and other financial obligations. It all added up to around $33.6 billion at year-end 2024.
$33 billion, that's quite a bit of leverage.
It is. It highlights their significant financial leverage and those fixed obligations. And the filing notes that $3.9 billion of that is coming due within the next 12 months.
So significant payments ahead.
Right. And the cash flow statement shows the ongoing cost of those obligations. For instance, they paid out $851 million in cash just for operating leases during 2024.
Does the filing talk about managing that debt load?
It does. It explicitly addresses this leverage and mentions that their debt agreements contain covenants.
Covenants, like conditions they have to meet.
Exactly. Requirements like maintaining at least $2.0 billion in unrestricted liquidity, basically, cash they can access easily, and also meeting a minimum collateral coverage ratio for certain secured debt.
And did they meet those conditions?
Yes. It's important that they state clearly they were in compliance with all these covenants as of December 31st, 2024. That's a key indicator of financial health, especially given their debt load.
Good. And what about total equity, the shareholders' stake?
Total equity also increased nicely, ending 2024 at $12.644 billion, up from $9.294 billion the year before. So the asset growth and profitability are boosting the equity base.
Okay, so with all that financial activity, how does this tie back to creating value for shareholders? What's management's perspective according to the filing?
Well, management's view, as stated in the filing, is that achieving what they call best-in-class pre-tax margin performance is the primary way they'll generate the cash flow needed.
Cash flow to do what?
To fund those ambitious growth investments of United Next. They really see those investments, the new planes, the network, the experience as the key driver for creating shareholder value over the long term. It's an investment-led approach.
Okay, so reinvesting in the business is the main focus. What about direct returns to shareholders, like dividends or buybacks?
On dividends, the filing mentions pretty clearly that their debt agreements actually limit their ability to pay certain dividends.
So probably not much happening there.
Yeah, the source we reviewed provides no specific detail about any dividend payments actually being made.
Okay. And share buybacks, buying back their own stock.
Similarly, those debt agreements also limit stock repurchases, at least under certain circumstances. However, the statement of stockholders' equity, which is part of the 10K, does show they repurchased $162 million worth of common stock during 2024.
Ah, so they were active with buybacks, even if limited. $162 million.
Exactly. So while potentially constrained, they did execute some buybacks. And just for context, the filing also notes the aggregate market value of their common stock held by non-affiliates was about $15.9 billion as of June 28, 2024. Gives you a sense of scale.
Right. Okay. So Pulling this all together now, we've looked at the strategy, the operations, the risks, the financials. What picture does this filing paint for United Airlines as they move forward? How do we assess the business?
Well, it clearly shows a company that's deeply committed to a very large, very ambitious long-term growth strategy in United Next. There's no question about that.
Yeah, the investment is huge.
They are making truly significant investments in aircraft. They're expanding their global network aggressively and putting real money, tangible money, into improving the customer experience.
And we see that showing up in the financials, right? Increased revenue.
Yes, that growth strategy translates into increased revenue, but, and it's a big but, it also comes with higher operating costs,
Right.
especially in areas like labor and maintenance, as we saw, plus the significant capital expenditure needed for all those aircraft.
Profitability is trending up, though.
It is trending upwards, which is positive, though we did note, the helpful impact of lower fuel prices in 2024 and how those large one-time special charges in 2023 make that particular year-over-year profit comparison look maybe a bit better than the underlying operational improvement alone. It needs context.
Right. And the success of this whole ambitious plan seems,
Yeah.
well, vulnerable.
Crucially, yes. It's navigating a minefield of risks. The filing is stark, really, about the potential impact of economic volatility, that intense competition, the operational challenges at major airports, supply chain issues, rising labor costs, regulatory hurdles,
And its SAF challenge, the fuel.
and the high cost and limited availability of sustainable aviation fuel, absolutely. And layered on top of all that is the need to constantly manage that substantial debt load and stay compliant with those covenants. It's a lot to juggle.
It really is. But despite all those significant headwinds, the filing also points to some resilience, some positives, right?
It does. I mean, they have added tens of thousands of employees since 2020. They have made tangible improvements passengers can actually see and touch on hundreds of planes. They have expanded their network globally to interesting new places.
And they stayed compliant with their debt rules.
And critically, they were in compliance with their debt requirements at the end of 2024. Plus, they continue to invest in technology like Starlink and sustainability initiatives, even with the challenges.
So for you, our listener, why does digging into this 10K matter?
Well, understanding this filing provides really valuable insight, I think. It's the strategic decisions laid bare. It helps explain why certain routes are being added or why aircraft interiors are being upgraded. It also shows the cost pressures that inevitably factor into ticket prices.
Right. It just illustrates the immense operational and financial complexity involved in running a major global airline day to day.
Exactly.
Ultimately, it feels like a story of a company really betting big on its future with this United Next plan, pouring billions into growth and transformation.
While simultaneously having to expertly navigate the turbulent, unpredictable, and highly competitive environment that just is the airline industry. It's a high-wire act.
Yeah, it really is.
So, okay, we've taken this deep dive into United Airlines 2024 Form 10K. We've unpacked their expansive United Next strategy, looked at all its components.
Right. Examine the details behind their revenue growth and the key drivers of their expenses.
Checked out their approach to shareholder value, including those $162 million in buybacks.
And reviewed that whole multitude of risks and opportunities they see ahead, straight from their own report.
Yeah. And the core takeaway, I think, is this clear picture of ambitious, significant investment aimed squarely at transforming the airline and driving growth.
Running headfirst into those persistent, tough industry dynamics and that broader macroeconomic uncertainty, it's growth versus headwinds.
Precisely. So given the sheer scale of United's investment in United Next, I mean, it's enormous, and considering the very real external challenges the airline industry always seems to face, here's maybe a provocative thought for you to chew on.
Okay.
How will this airline, United, balance its really aggressive push for growth and transformation with the fundamental, undeniable need for financial resilience and day-to-day operational stability? And maybe more importantly for you, what does that balancing act ultimately mean for the future of air travel and your specific experience flying with them down the road?
That's a great question to ponder. A lot riding on getting that balance right. Well, thanks for joining us for this deep dive into the filing.
Hope it was insightful.
We certainly hope this helps you feel truly well-informed about one of the major players shaping the skies above.